All right. Let's do some analysis, market analysis. Let's go. NQ still pulling back here. So NQ. Let's wait for some more folks to jump in before we start our analysis. Analysis. Let's do this. How many people in here? 3 watching. 4 watching. All right. Cool. All right, let's jump in. Okay, so right now, we can look at what NQ is doing right now. Let's go to the higher time frame. This is what the monthly looks like. Still obviously in an uptrend. We're within this monthly candle, so I think this is going to be important for us. If we break over this 26,100-ish level on the monthly candle, that's where we'll probably see some upside momentum. Let's go down to the weekly. So bullish engulfing on a weekly. Still a nice hammer here, whatever you want to call this, but this is a nice buy candle right here. So, I mean, everything here is still saying up on the weekly. Let's go to the daily. And again, the way you want to look at when you're looking at the monthly is what, if this was a 1-minute chart, what would the price action be telling you, right? If this was a 1-minute chart, what would the price action be telling you? Look at all these downside wicks. So lots of wicks, lots of buying. Again, still telling us that the market is in an uptrend. We're holding a upside support that's higher than this support here. So this area right here I'd be looking at if we do come back down right around here, 25, so wherever this is, I'd be drawing this. I'd be seeing where this was if we do come down here. This is our daily resistance. We also have this here. If you can see here, we actually have this daily trend on a resistance side that held on 3 touches. So, you know, even though I see we're in an uptrend, in the shorter term, I do see us moving back down. I'd like to see us move back up and do a double top here right around 2600 before I move back down. But if we go back down, like I said, I'd be looking at this upside trend to hold. If you go to the hourly, we can do some fib levels and figure out, based off of this move up from open, where's our retracement level. So we have 38% at 904, and then the 50% actually lines up with our support here on the hourly, right around 25,860s, 69 right here. So this is where I'd be looking for from a support perspective to hold. If this doesn't hold, then the next support is down here where we held here. So this needs to be the first layer of defense from the buy side, right around this area right here, right around this 860 area, 863 to about 869. So within that 10-point range or so is where I'd be looking for first support. It also looks like we're possibly creating some sort of bullish continuation pattern. So you always want to look at if there's any patterns in play as well too. Because if we create a high and then we expand, this expansion could just be a zone that it's creating. Oftentimes we see these things. So you can see here we have 2 bars, we have a green bar pullback, and then a continuation bar. So what's the extension on this? The extension on this brings us right here to 38%. That's 100% extension, which also we have a support here as well too at 25,900. So based off of this move right here, based on just this move, which is a 2-bar pullback with a single bar retracement and then another 2-bar extension, 100% of this move would bring us exactly to our higher time frame opposite direction retracement right at 25,900, where we also have some support here. Let's take a look and see on the shorter time frame, on the 5-minute, if we have anything that lines up here on this 100%. So we have this price displacement right here on the 5-minute, creating a decent support. So we do have 3 layers of confluence right around 25,900. I would not be long here. I don't think this is a good long area. I'm not seeing any levels that align with this area. So I'd be looking at 25,900 as needing to be defended first. And then I'd be looking at this 25,859, where you can see here we had our original support on the secondary move up after this bullish extension. But also a line. I really actually like this one a little bit better. So this 100% extension, and then lining up with the 5-minute price gap, and then a couple supports here, and then a breakout candle right here. This area looks good for a long. So we'll take a look. Maybe we'll take this trade together. You know, you never know. And then we'll take a look at. So first, any questions there? So again, we want to look at legs, right? We want to look at legs that are moving. Right now we have leg 1, we have pullback, we have leg 2. Leg 2 brings us down to 25,903 from an extension perspective. That lines up with our retracement from this move up. And then it also lines up with the 5-minute price gap that needs to be retested as well too. So 25,900, that's the area I'd be looking for a long, and then stop out. Obviously you can stop out, 10, 15 points below that. And then next area we'd look at is right around here, in this area right here. So let's go to silver. So today in silver, we had posted today. Everybody was obviously bullish all day, which is totally fine because we had a 10% or move up, or what it seemed like a 10% move up. But I had put in chat earlier today that we were going to short silver, and I put it right when silver was right here. So let's review that and why we looked at that. I think that's important for us to take a look at. So first thing is, if we take a look at our levels that are already created, right? Layer 1 is find trend, right? Trend is layer 1. So you can see we had a move up here, then we had a pullback, and then we had another move up. So we've created basically a B, C. And once we have A, B, C, then we can try to figure out where D is. We can try to figure out from an extension perspective where D is going to go and where D is going to take us. So as you can see here, we have the 100% extension. Oops. As you can see here, we have the 100% extension right around this area, right here. So that's part 1. Part 1 is, where's my 100% extension from my ABC move, and now I'm looking for where the top for D is. That's the first piece. Then as we're moving into this area, now I'm trying to pinpoint where do I want to take this trade, right? And so I'm looking for 3 swings. 3 swings are the most important piece, and swing 1 starts when price goes to extremes. That swing 1 starts when price goes to extremes. So I want that to be something that you guys remember. Swing 1 starts when price goes to extremes. Okay? So swing 1 is here, price went to extremes, right here. Now we're waiting for swing 2 and swing 3. And as we're watching swing 2 and swing 3, we want to see our divergences, right? This is a 5-minute, so we had some clean divergences here. But price divergence, first swing, first peak, secondary peak, and then third peak. And then as you can see here, we had some really nice divergence as we moved into this area right here. Like just significant, right? Almost a 50% reduction, 15-20% reduction in buying strength from peak to peak to peak. Right, so we're having some nice moves down here on silver. So nice. That was a nice short right there. So this is how we get into this entry. And then additionally, we also had this trend, this upside trend that was created off multiple peaks that also was holding price within a certain area. So when you look at things like that, aligning it with the location of where you want to look to take a trade, then you're confident and we take the trade. And that's why we took that short. And then we were able to catch the pullback from 86.2 to 84.795. And then we have this area right here too. So silver support, 82.43 looks like a good silver support area. We can also look at where the retracement is from this move and where the trend is from this move. So if you can see here, the trend is right here from this move up. So we can very likely come down to this trend right around 82.780 or so, where also we have some of this right here. We have this price gap right here. So I would be looking at, from a long perspective, looking to see how price reacts to this trend right here that it's pulling back to right now. And then what happens as we break right here, right? This has been the support all day. We are moving into it. If we look at, again, using our first leg as our indicator, right? So let's go to the 1 minute chart. So you can see here, this is our first breakdown, first pullback. See how we held the 78.6 retracement level. So now let's do an extension. And price on this at the 1.618 brings us to about 83.385. So it just depends. It doesn't look like there's anything else really here at this level, so it's not standing out to me for any reason. So I want to look at this leg now. I want to look at this leg down. So this one that was broken and pulled back. I want to try to get a good 50% retracement level. So yep, so 61.8 is a fine level too. So we have a 61.8 hold here. So I'm going to do my extension from here now instead. So this lines up a little bit better with this area right here and this trend right here. Oh, there we go. We're dropping, still dropping. So we'll see as price moves into this area right here, what happens. Really nice short from that area. And we called that top. We called the short here right at 86 in chat a while ago. You can take a look. And we've been trading down low. And so that's the power of multi-confluence, layered multi-confluence within your strategy. It's the most important piece, the most important thing that you can trade with. Several looking bullish tomorrow. I'm trying to understand fib, but I don't know if I want to. I don't know if it's really worth it with my strat. Doesn't incorporate into it. I mean, fib is important for all strategies because it gives you not just because you want to use it. It's not about using it. It's also about where can price go if you're in. Let's say your strategy is working out, you take a trade, and you're like, okay, where am I going to take this to the upside? That's the question you're asking. Well, fib levels can tell you what the upside targets can be. It tells you where you're probably going to see resistances. It's not that hard to draw the fib levels. It just takes practice of where you're going to draw your highs and your lows and your retracements. And you can learn it pretty quickly. So I don't see this as a good support area right here, unless we're holding this. See this? But this invalidated that, so I don't like that. So I'd like to see us hold below this 83.805, get one more leg back down, and then we'll look for either this area right here or a retest of this trend, depending on if we get there. So let's go back to NQ. 912 area. We'll see what happens here. So we have this downtrend that's been created here. And what you'll see is you'll see price react to this now as we get closer to it. And so the question is this going to hold right here, right at this level right here? And then we're going to get a 3-bar engulfing candle right here, and then bring us down to this level, is 25,900. We haven't really seen any divergence here yet. You see this, how this strength here is consistent. So we want to see, I'm not going to take a trade just because I see these candles. I need to see some divergence. I need to see it come into a key level, which is like right here where we have multiple things aligning. And I need to make sure that, again, the divergence is the third layer. Like that's the layer that I'm looking for. So layer number 1. And you can use your indicators in layering as well too. So keep that in mind. Your indicators or your strategy or your setup, you can exchange that for a different layer. That's totally fine. But your layers have to tell different stories. They have to tell different stories. One of mathematics, one of supply and demand, one of momentum, one of buying and selling pressure, one of trends, right? Whatever it is, you want to incorporate it, but you have to have different layers that tell different stories. So that way you can make sure that you have maximum market participation. That's the main thing here. So I want to see one more move down here on silver. Oh, one sec. My wife is calling. Hello?
Hey,
Hi.
so apparently that tire was not the one that they fixed last time. Remember how they rotated my tires?
Yeah.
Yeah. So he said it was a new hole, but they only charged me $20 to fix it.
Interesting. Okay.
Yeah, whatever.
All right. Sounds good.
On my way.
All right. Bye.
Oh hey,
Yes.
I don't know if you'll be home by the time that I get there, but I put your headphones inside your basketball shoes.
Okay. Sounds good. Thank you. Bye. All right. So again, watching silver do its thing. We have our levels here. You can remove some of these things if you don't want to look at them anymore. Totally fine. I'd like to see some 1 minute divergence here on any sort of move back up. Do I think that we are going to come back up to this level? Yes, I do. 100%. But I'd like to see us come to this trend first. This trend for me is going to be very important. And I'd love to take this. So this is basically the first pullback to the trend after separation. After trend separation, which happened right here, which was January 26th. So quite a, oh no, not January 9th, January 26th. So about 3 or 4 days ago. It's the first time we're pulling back to the trend here. So I want to see one more heavy candle down, maybe 2 more. And I want to see how price reacts at this trend. Oops, I did not mean to remove indicators. There we go. I'm going to remove. Does anybody else notice that they will draw all their stuff and then when they're done they have to just remove all of it? It's like, let me clear out my let me clear it out. All right, moving back down. Again, we're watching the trend. The trend is the most important piece. This piece right here. That is important. And it actually might align pretty well with this previous support here where we broke out of. So 82.4 or so is what we're looking at. Let's go back to NQ. Oops. Let's remove all of these. So it looks like we this trend right here has not held. So we can remove it now. Not a strong trend. So the next one we have is right here, which could be what we're slowly moving back to, but I just don't like this area right here. So I will not trade NQ. Silver, though, looks like it's going to a nice little area for us. I want this trade right here, 82.5. So silver likes to create these micro trends that it squeezes out of. One is right here. So if you see, there's no real trend that's been created yet. There's no trend here. There's no trend line that we have here from this move down. The only one that we have at this point is that's been respected 3 times is this one. This one right here. So what we could be forming, and now we can go to a higher time frame. Let's go to the 4-hour. So what we could be forming is like a pennant, like a bullish pennant. Something like that. Or something like that, depending on where this trend is and where we test it. So again, we don't know for sure, just all things to provide some sort of thesis. But that's what it looks like. But again, this top is always going to be one that we want to watch. So this area right here is where I would take a long trade. Right around this area. Not because of that trend line, but right around here. So so let's take a look at why NQ did what it did today. I think that's important as well. I've got about 10 more minutes on stream, so we'll look at some things of why we bounced and why we held certain areas. So retracement from this move to this move. Still not there yet. Divergence on NQ, as you can see here. Right there. Some additional divergence on NQ on this move. So the problem with divergences are that you will 95% of the time get a move in your direction. And I talked about this earlier. That doesn't mean you're going to get your full reversal. It means that you will get a trade in your direction based off of that divergences. Basically, the market is resetting, right? But sometimes the reset doesn't turn around all the way. In a trending market, divergences show, but you have to manage the trade. You've got to trail the trade, and you've got to make sure that you have trailing stops and you're managing it frequently. So, but every time this happened, every time you had a divergence, you had, a 30-point move, 30 points up here, divergence, 50 points, 100 points, right here, divergence, 1, 2, swing right here, another 30, whatever this is, 930, 50 points. So when you're trading like this, you got to remember, we're not always looking to hold this position for as long as possible. You're not always looking to hold. And I think that's the issue that we have. We want grand slams all the time. Well, in a trending market, you can't get a grand slam typically unless you've bought the bottom and you've been holding all day. That's your grand slam. But today, it was just constant swings and moves up and swings and move up. Just basically the market doing micro resets as it continues. So that's the main piece there is, if you're trading divergences into key areas, go in with a size where you can take half off when you get the trade in your direction, and then leave a runner. And it's okay if it breaks because there'll be another opportunity right afterwards, which will be totally fine. Silver with its first divergence here, I'd like to see one more candle down. So I'd like to see some strength up to here. And then one more candle down somewhere. So that is it. So I'll jump. So any questions about anything I can review? I got 5 minutes before I got to head out to the gym. And divergences can also be on the sell side as well too. It doesn't just have to be on the buy side. If you guys remember our gold analysis from yesterday, remember this was the area we were going to look at for divergence. This was the trend we were looking to retest. See how it retested that trend right here. This area became that area, right around this area. So then what I would do as it moves into this area and as it moves towards this trend and then retesting this trend, I'd be looking for divergences to tell me that it's switching. So if you looked at gold today, you have a really nice divergence here, right where we were looking at areas. So that I think that was the same place as silver as well too. So again, multi-layer confluence. And multi-layer doesn't mean you align your moving average with your VWAP. Those are telling the same story. It's just repeating the same type of information. You've got to allow price, supply and demand, trend, divergence, momentum, patterns, channels. All of these things are telling something different. The more of those that you have aligned, the more likely it is for that trade to be bulletproof. And I always say, if 5 things align, if you can get 5 things to align, 5 different things to align, that should be the trade that you go max. And you just say, nah, this is why I trade. I trade for these types of setups. Max confluence. But if only one thing is aligning, like if you just see, a bullish engulfing candle, but it's not in an area that you notice is a supply or demand area, or it's not close to a trend, it's far from a trend, then that should tell you I'm not going to take this trade based off of this one layer of confluence. I need at least 1 to 2 more things before I even think about taking the trade. And the benefit of that too is it'll help you with staying in your trades. That's an important piece as well too. So I always recommend, man, Fibonacci is king. The entire market, even at a micro level, moves in Fibonacci. We do a lot of the higher time frame Fibonacci analysis, but at a micro level, it works as well too. A micro level being like, for example, this leg right here, this micro leg. This is a micro leg. Okay, let's see, micro leg. From the top to the bottom, we have the 50% holding here. Then we have our extension. 100% held right here. Micro, right? The market has to move. It's mathematics. It doesn't just move because somebody wants to push the price down. The whales are not sitting there staring at the chart like we are. They're not. Their system is automated. There's certain rules that are set up. There's not one person there. There's somebody that's monitoring it. But big money and professionals have rules set up and systems in place that automate the process for them. Mathematics is king. Okay? We just did that. Mathematics is king. So just remember that. Oops. What did I just do? Oopsies. Okay. Delete that. Delete that. Okay. Cool. Well, I'm gonna go to the gym. We'll see what happens, and then we'll do a analysis in about 4 hours to see where we held, where we moved, if price is going into our direction. NQ really is the main thing. See how we're continuing to move down on NQ. This area right here, there was nothing here. There's nothing here from a support perspective. This bounce would not make me happy if I was looking to go long. I would be looking at some sort of retracement level or a previous supplier demand zone or some price gap. Like right here, we have like I said, this price gap right here that needs to be retested right around this level, 865. But then we also have this level right around here, right around 901, where we had the breakout to the upside before this move up. So I will be back in a little bit